Hi and welcome. This is our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinars. Our goal is every day the same, quick and smart. So let's have a nice start like every day. And today it's Wednesday, 7th of April, 2019. We will start like every day with our risk disclaimer. Trading with financial instrument offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long, detailed version there. Also, some other information, of course, you will find on our web pages. For example, that we celebrate our 18th anniversary or birthday this year, 2019. So we are one of the oldest and experienced Forex and CFD brokers globally, what you can find. Check it out on admiralmarkets.com. This is me. My name is Jens. My English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. Monday, Jay's Day. Tuesday, it's Paul's Day. Like today, on Wednesday, Giancarlo's Day. Thursday, it's Marco's Day. And Friday, it's Dick's Day. 5 days, 5 leading day traders every single day to the same time. But if you have a bank holiday like coming Friday, there we have no webinars. So coming Friday and coming Monday around Easter days, no live webinars for your information already today. And of course, if you like to trade Forex and CFD, so you get many benefits only with us. For example, 2 highlights, DAX 30 to a spread of just 0.8 points, or euro dollar to a spread of just 0.6 pips without additional commission in account type Admiral Markets. Check it out on admiralmarkets.com. So now it's not time for Jay, now it's time for Giancarlo. Sorry, I don't have the slide prepared. So good morning, good day, Giancarlo. What's your view to the markets today?
Good morning, gents. Good morning, traders. We are in the Easter week. This is typical week with a lot of choppiness, a low volatility. I would like to remember that this low volatility is a very positive signs for markets because maintain solid the bullish aptitude. So we can say without problem that there is no no danger for now in the market to have at least a strong correction. This bullish market is helped, of course, from buyback in USA, from return of leverage, and the low interest of bonds that oblige the investor to find some revenue in the stock market. But at the same time, we have to remember that we are reach something like an equilibrium between the correct term we can use is suspension, a suspension between the economy that the US economy that is holding back but not much, and the Federal Reserve that is ready to intervene, but in the same time they don't consider it's not the right time. We know that Trump pressed the Fed to create a new rate cut, and in the same time Mr. Mario Draghi maintain a new monetary stimuli. So you can understand how it is difficult week by week. We open with the same discussion, but it's important that we understand it's very difficult to maintain to find some short acceleration. My idea is to maintain a double investment. It means you can work very good in intraday or scalping, but at the same time it's logical to have some multi-day position, because the market in this moment with this volatility need a lot of patience, but at the same time the risk is very low, so we can adjust in a better way our stop loss, and we can appraise it more profit using the multi-day action. In the same at last, I would like to remember that what happened the last year now is very similar what happened in the summer of 1998. In this time, in this year, we assist a sort of pattern that create a vertical rise until April 2000. Although I understand that the correct economic paradigms are different, I believe that the favorable risk premium will give more fuel on stock prices, and we can expect a real upward speculation. So my idea is that at last we have to wait the vertical acceleration in the indexes, and we have to prepare at this situation, because the market is ready to do new historical hikes, especially in the USA market. So now I remember just today we have just this news balance of trade in the USA. We know that for low volatility we are assistant 2 weeks, very complicated, and in the Standard & Poor, but now it's time to analyze the stocks. I of course start with the with the Standard & Poor. Standard & Poor maintain the bullish uptrend without problem. Yesterday we have assessed a new annual hikes, and we are very near at the maximum. The historical high is 2,954. What we have to do now is to understand that this upward can give you a lot of fear, because I understand it's logical to think that market can do a sort of correction at least, but until we don't assist at least 2 or 3 days of bearish acceleration, is difficult to speak about short. So we have to concentrate our attention about long position. I return in H4 charts, and we're gonna appraise how the Monday gap up of the 1st of April maintain the bullish aptitude, and now we are very near to break at least today is possible of this very important resistance here in 917, and we can prepare for the rest of the week to try to reach this level. Up this level, of course, we have new historical hikes. My idea is very possible to reach for the first week of May the 3,000 point. So all depend of how the volatility will be managed, because a sign of a good bullish trend is properly the low volatility. In case we can assist a presence of high volatility, a long candle, we have to understand if we can have a new vertical acceleration. So for today, I strongly recommend to take a look what happened this afternoon if the price touch this level, because it's probably that we can try at least to do a new annual hikes and try to reach this level. In the same time, for short side, it's logical to wait at least the break of the last minimum, because the price do every week a new increase in minimum, so it's difficult to open a short position unless you work in scalping, but it is different. For short side today, I suggest to try something only if the price break the level of 2,900, and in this case is probably we can try to reach this zone between 888 and 877. Remember that to have a little strong correction is it's important that the price lose this point, and we try to close of course this gap, so you can understand that a sort of correction, more strong correction, because I cannot speak about reversal, because the reversal point are very, very far from current prices. So in this case, if we close the gap, we can start to find more structured short position, at least in weekly view. But for now, it's very, very impossible to find a multi-day short. So remember this level and prepare to have a new hikes until of the end of this week. At the same time, the situation is practically the same in the Dow Jones, because the price remain up at the very important level of 26,326. And in this case, remember that the index maintained the bullish aptitude until the price remain at least up of this level, 26,154. Below this zone, it's logical to prepare some correction, and price could try to retest this level of 25,117, and in extension we can arrive here. But of course, you understand we need stronger power in the market, and for now Dow Jones try to go near his historical hikes, and remember that the price today can try to go here, and up 26,611 we can have a new at least a vertical acceleration and try to reach this zone. The best index, of course, is NasDaq, and NasDaq we know that is an anticipatory index, because they practically we are practically very near a new historical hikes. We need just at least 70-80 points to reach this target, and we don't have any signs of weakness in this market. What we have to do now is try to buy every new historical highs, or at least try to buy in a pullback, because in the multi-day position we can have the possibility to close this week with the new historical hikes, and the price can try to reach in this day, or for the end of the week, these two important levels. The first one is this 7,726, and in extension 7,775. Of course, remember that all this level is made by smart money, and I present this level only for the possibility, only follow the creator of the markets. In the same time, for short side, we need at least a break of this level. We are speaking, of course, in intraday position 573, and in this case we can start a sort of movement that can retest this zone. Remember that this zone is very important, between 341 and 270, and below this zone we can start a more structured bearish acceleration. Now we are going to speak about the situation of my favorite index, DAX. We can start in the daily chart, because we have a good economic signs in the German economy, and we remember that I told you about the possibility for this month for German index to arrive at 12,400 points. It is a correct target for this month. We needed at least just a few 300 points to reach this to reach this level. But at the same time, remember that DAX is very volatile index. So for now, remember that until the price remain below this support between 875 and 931, the trend remain bullish, and we are today to have a new historical new annual hikes, and my idea is very difficult to have a change of trend for now, until the American index maintain the current direction. And in the same time, you can see how it's difficult to think different. And the Monday gap up of 1st of April, of course, remain very far. Remember that a gap always be close, but depend of typology of gap. In this case, we have like a gap of April April 2017, the Macron gap that was closed after 4 months. So don't waste your attention in this detail. Of course, in terms of analysis, correct, but for now we have to follow the trend. You can appreciate the same situation in HE4 charts. We can have at least some small correction. The prices maintain the zone of 12,000 point, and this is a sign of strength in terms of bullish trend. In 50-minute charts, we have to react in multi-day position, because the volatility is very low, and we are blocked in this smart money range between 12,115 and 12,078. Until the price remain here, it's difficult to have a good position, to have the possibility to open a good position. But what I can tell you, that if the price going below the level, we can have a sort of bearish acceleration, and in this case it's logical to try a sell stop with that maximum 30 point of stop with the first target here at an extension. In this point we can close this long candle, but at the same time, remember that this zone is a strong support, so you can use this level for reversal point. In the same time, to try to reach new heights. Remember that price in the German, in the DAX, need to break this important resistance, and in this case, we have to try just a buy position in the break, so in case we have a strong break of the last maximum, we can put a buy stop here. Of course, we have to maintain here a stop at least of 30 points, and we try to reach this zone. Remember that this whole zone between 136 and 171 is very strong zone, so we need a great volatility, a great acceleration, and in this case, in case we have another extension and the price could reach, why not this week, this very important resistance in 12,205. For now, we have to wait if today or tonight, in general, we can say the rest of the week, we need to go out of this choppy range, because in another case, it's impossible to do a good intraday position. Let me speak about now something about EURUSD 50, because we use these indexes to we can call, of course, the standard European Standard & Poor, and the bullish aptitude is very concrete, and we maintain the great the last resistance here in 3,455, and now my idea is possible for for next 2 weeks to try to attack the next resistance here in 3,535. Remember that in case the price arrive in this level, we can start a new long-term uptrend, and only if the price lose at least this zone, we can speak about the reversal, and of course a new bearish trend. Use this point like a refer. Of course, we have here the Monday gap up of 1st of April, but in the same time, if the price don't lose this level in 3,405, it's difficult to think in another sense that is not bullish. We are continuous with FTSE 100, because the price maintain the zone of 7,389, and the price tried to attack for the first time our resistance in 471. In case the price break this level, we need to to cover this smart money zone and up 514 start to see in a short time the next resistance here. We speak about the Brexit now with Forex. I suggest to try some short only below this level, and all this zone is a good zone to use the pullback for rebuy this index. I would like to start with euro dollar because I would like to remember what happened in April 2007. We have something very rare in the forex market. We have this macron gap, and it's logical to think that it's possible the price can arrive here in the next month. In the same time, the dovish Fed aptitude are help the euro to maintain the bullish aptitude after this very interesting double bottom, and we can say that it's possible due to increasing minimum that euro dollar can start a new can reinforce the accumulation of the last 2 months, and my idea that it's possible for this week to reach at least this resistance. And remember that if the price recover at least this zone 1.1353, it's possible to have a reversal in the trend, but I think that we have some elsewhere in this aspect the next month, because typically in May, euro dollar present one of the best months to have a good trend in this pair. Until the price remain up this smart money zone, is difficult to open short position, and in the same time only a strong break of this level can help us to have a strong sell-off. And in this case, we try to reach 1.1047. This is a very monthly support. So take care if the price break this level. For pound, remember that we have the European Union give 6 months to have a new agreement, so until October of this year, and we are in a sort of indecision and choppiness market, because we have a large time to understand what's up, how UK manage this situation. For now, what we have to do is to focus our attention on this level, on 1.30 in general. This is a divisory between the short side and the buy and the long side. In case we have a strong break on this level, prepare, because we have a great short opportunity with the first target in 1.2941 and in extension 1.2909. Remember that only if the price recover this resistance 1.3172, we can have a possibility of new construction of uptrend, and only if we break this level we can start a new uptrend. I would like to continue with just a moment with oil and gold, because we are very important, a very interesting situation here. The OPEC-led production cuts help pressure prices in the last session, and give a sort of a boost, and we can appreciate how we are starting break our last target in 74.22. Until the price remain up of 73.25, we maintain the bullish up to for this week, and for today we need to maintain the 74 level. If the price remain up this level, it's good to think that today we can have at least the possibility to reach to go near at least level 74.70.80, and for the rest of week we can try to go near at of course $75, but the most important resistance is located here. In any event, until the price remain below the $62, we can have any sign of weakness. It's difficult to think and strong bearish acceleration. I would like to speak about what happened with gold, because we have some change in the market. Dollar denominated gold is being pressured a strong greenback and firmer treasury yields and increased appetite for risky asset, of course, help to have this fall in gold. I would like to remember that I always tell you that this support in 1,284, but more important 271, it was important to maintain, to have a possibility of return of a bullish trend. But for now, this breakout with the high volumes indicate to us the possibility to have a change of trend and a new bearish acceleration. For now, remember that for this week we can have like a target 268, but more important, this is our support that the price can reach in few time. All pullback until this level at the maximum this zone can we use to re-enter in the short side. We denegate for now this scenario only if the price recover 1,310, but with the high risk updated and the Standard Poor near to new historical hikes and Fed wait and see, is difficult to have a change in at rapid time in this instrument. I would like to tell you thank you very much for your attention. Have a happy Easter and a good week of trading. See you next Wednesday. Bye.
Thank you, Giancarlo. Tomorrow is another day, 5 days a week, 5 different traders. So if you like that series, tomorrow a new trader, a new trading style. And if you see and watch that again in a couple of hours, it will be available as a YouTube file on our YouTube channel. So you go to youtube.com/Admiral Markets FX. Greetings from Berlin office all the time. Best trades and already today, happy Easter. Bye-bye.